Welcome to the Young CPA Success Show. If you're a young accounting professional, this podcast is your ultimate guide to navigating your early career. Join us as we share valuable insights, expert advice, and practical tips to help you kickstart your path to success and excel in the accounting industry. Let's embark on this exciting accounting journey together.
So I think there's a lot of stuff that's gone on since we've last talked. And I think the thing that I think about with FinOptimal the most is what you guys are doing and trying to lean into the artificial intelligence space, kind of lean into some of the automations and stuff like that's been in your bag already.
Yep.
And what I've always appreciated about your approach is that you're very pragmatic about what is real about it. You're not going to be hyperbolic about what the future is going to look like. You're feeling pretty comfortable in what you provide and how you think about things. So maybe we should start with the big elephant in the room, which is when Bench went down at the end of last year. I had a lot of thoughts about it. I was I see what they're doing. It reminded me a lot of Scale Factor, if you remember that from the early 2020, 2021. I tried so hard to work there in 2017, and they just did not want to hire me. And then they went under, and I was okay, I don't feel as bad about not getting that job. But Bench felt a little bit like that, where it's you've had this SaaS play to it, but really your SaaS was just outsourcing and it didn't work from a business perspective. So how did you view that? How did you think about it, and how are you responding?
Hang on, I want to back up. Let's make an assumption that our audience and one of the co-hosts might not know the full story of Bench. So let's do a Cliff Notes version of Rewind. And give me a synopsis of what has happened. Catch us up. I know high level,
Joey, your hat. I mean, who knows it best?
It might not be me.
I'll take a gander. I'll take a gander. I'll tell the
safe.
story, and then I get to have the first commentary.
Sure.
Fair.
There you go.
So we're going to talk about Bench. Scale Factor is much closer physically to me. That was in Austin, I think. But less recent. Bench was a company that raised a lot of VC capital. I don't know how much. VC capital is redundant. They raised a lot of VC. And their strategy, this is me telling what I think their strategy was. I obviously wasn't in the boardroom, wasn't in management there, but I think they really aimed for the low end of the market in terms of willingness to pay, and also the needs of the clients. Mm-hmm. They're looking for people who don't need much and don't want to pay much. And I'm sure that that's not a tiny segment. I'm sure that they thought through the pros and cons of that approach. And, I think a lot of people who are talking about, I bring that up because a lot of people talking about their demise are very vocal about the quote unquote race to the bottom. They were charging $300 a month, and that wasn't the lowest price point. I remember early on when I looked at it, when you wanted to get a quote, they had a slider. It was kind of based on the larger of monthly income or monthly expenses, but it topped out very, very low, right? What FinOptimal, very quickly, we were charging, early contracts, very few were less than $1,000 a month. And, this is way below that. And so, they got customers presumably that were willing to pay in that range. And they said, we don't do accrual accounting, we do cash accounting, which basically means we're going to categorize. So I think they had a long run. It was maybe 10 years that they were in business, 10 or 15 years. Mm-hmm. And then suddenly about 2 months ago, they announced that they were shutting down.
Abruptly.
And then the next day they announced that they were not shutting down. They were being sold to, I think it was an HR services company.
Employer.com.
What was it?
I think employer.com. They're
employer.com.
Serial business acquirers.
I was going to say people.com. So I'm glad you. So then, so people still called it a spectacular demise because presumably almost all of the equity was wiped out. It was not a successful play for the VC community and any other investors. And, for all practical purposes, Bench is no more. It's a part of another company.
Mm-hmm.
So, people did talk about the race to the bottom. I don't really think, personally, I don't think it's a compelling argument that, well, they went after the low paying customers and, that's why they failed. I think people who are only willing to pay $300, now maybe it's closer to $400 or $500 a month, they are not going to pay $1,000 or $2,000. So it's not like that's not like you people who are saying it's the race to the bottom, I won't do it. You're never getting those customers. And Bench did get those customers. We could argue why they failed. Maybe it was about financing. The hurdle rate is simply too, like when you have VC in your cap table, you have to grow at a certain rate and you make decisions, you make decisions that are consistent with a higher risk play. And maybe you can't make $300. You can't make money at $300 at those levels, right? Given lots of other. So I am not a race to the bottom proponent. The thing that I think about the most is why they chose to build their own general ledger. You talked about the SaaS play. It is a non-trivial enterprise to build a general ledger. You're competing with, an 800-pound gorilla that, at least when Bench started, this has changed now. You're paying $100 a month for QuickBooks, but at the time when QuickBooks Online was still trying to become dominant, you could get QuickBooks for $15.
It was like $10 a month.
It was so cheap.
Like when you started.
It was so cheap.
Yeah.
And so it was just not, in my opinion, a good play to try to build, and there was also Xero. So it's not that their GL wasn't good. They're not the only company that built their own GL. And I've posted about this, and somebody commented and said, we built our own GL. It's great. Yeah, great. Build your own GL. But your venture capital is very expensive. If you're using it to develop a general ledger, you are not using it to develop processes and other technology to make your team more efficient, unless you think the general ledger is doing that better than QuickBooks, right? I'd love to build a better general ledger than QuickBooks, but I don't think the venture capital is going to pay off that quickly for it. You got to build something that is added value to the general ledger and then prove yourself. And then maybe you can go back and build a general ledger on top of it. So that is sort of, to me, a decision inconsistent with making the most of that capital and maybe some kind of indicator as to where things went wrong.
Wow, what a concise answer.
Well, I had to tell
Now
the story.
follow that up.
There's a lot we can.
I was afraid you guys
there.
would bring it back to baseball. I really wanted to yank it off
fair.
of the bench.
So when Alex Rodriguez signed that I'm just kidding.
I mean, the thing, calling it a SaaS is interesting. Like, it's really a service that you have to use our platform. Right? I think everyone just felt like they could just go and windmill dunk on them, though. Keep it in the sports references all over LinkedIn.
Yeah.
Like, everyone was just celebrating their demise. And I do get it, because I think it's frustrating as a business owner when you're providing a service that is worth thousands of dollars a month to have people constantly come to you and say, well, I could get it from them for $300. So why would I work with you? And then you go as a business owner, how could they possibly provide it at $300? And then it goes, well, it turns out they can't. And that's why they're going out of business. So you kind of, everybody wants to take that victory lap, which I think is natural. But it's also like they did try to do something much greater, like at scale, than what a lot of other accounting firms are trying to do. So you have to give them respect for that. I don't necessarily agree with calling a service a SaaS when it's literally just a service. I think a lot of people do that. What is AI? People say, what do they say? Always India or whatever. Like, it's just offshoring disguised as AI. I think there's a lot of people doing that. I think that's like highly unethical, honestly. I think it erodes trust in the accounting community on new tech. Like when people hear that there's this thing and then they find out, no, it's actually not software, it's just people overseas doing it. That's not good for any of us. It's really not good for any of us.
I don't remember that being part of the bench story. That was something that came out, that they were alleging to be automating something that was actually people.
I think that they're, I don't keep track of Bench's marketing that often. I think towards the end, they were talking about how they're using automation. I could be wrong there. I know who they pointed to originally and said, before they got acquired, they said, hey, we're done, but like you should go work with this other solution instead.
Oh yeah,
That
I remember
was
that.
like an AI platform. And I think those are
Okay.
coming a dime a dozen. We can get to that eventually because I think that's interesting. But like what I also found interesting to the bench reaction was everybody on LinkedIn just repeats the same thing in an echo chamber all the time, like the same 5 principles. And like I think they are good ideas, right? Like niche down, get rid of your low paying clients, focus on your high paying clients, try to replicate your best clients. Like Stats does that. Jason Stats talks about it all the time. It's great advice. The same people, though, who parrot what he says, the second bench went out of business, were groveling on LinkedIn. Like, I'll take any bench client you want. And it's like, how can you out of one side say they're a race to the bottom for $300 and then turn around and go, but now I want those $300 clients, right? So the whole reaction was, and that windstorm was very, very strange. Like the reaction just felt gross to me.
I would be interested in seeing the TAM. Sorry, I don't get another turn. I know, but
no, take the turn.
Like how many? Because I have to correct what I said before. It's not that every one of their clients was only willing to pay that price. Some of our early clients were former bench clients. Some people who, if they, like to Tom's point, if they don't understand the difference between $300 and $1,000, they'd say, why would I pay $300? Why would I pay $1,000 when I can get it for $300? And some of those people, once they realize the service difference, not having accrual accounting, for example, they say, oh, you know what? I am willing to pay $1,000. But there's still plenty of people not willing to pay $1,000. And I don't know how many that is. It's probably a sizable number, but the economics are probably not.
Well, the idea of standardizing like everybody has to be on RGL and we control the tech is an interesting move, because when you think about like a productized accounting firm, like standardized technology is critical. So like it's one way to think about doing it. It's obviously, Jesse, not how we think about doing that, right? But it's an interesting play. Again, they tried something different and it didn't work out after 10 years, but it definitely worked out for some of those 10 years. I'm sure some of the initial founders made a lot of money off of it. So you win some, you lose some.
Well, I think there's a couple of things that, and I'm glad you said something. Both of you said something that I really wanted to touch on here. I think a little bit back to, this is a Twitter conversation I had with, I call him Boomer Mike on Twitter. It's Mike Sylvester. He's a CPA, does a lot of stuff, posts a lot of weird polls that are always kind of funny to see, just a slice of Americana on his polls on his Twitter timeline. But we were having a conversation about marketing that we're seeing, like as the NFL playoffs are ramping up and on the Super Bowl, about like, oh, here, fire your CPA, we're into it. And it's like, there was a lot of backlash to that. And my response to him was like, well, CPAs, we've kind of done this to ourselves in a way, because to Jesse's point, we haven't really done a great job as an industry of like really explaining the spheres of how things work and the levels of pyramids in terms of like, yeah, you do want to pay me $1,000 a month because here's all this extra value that's going to be provided to you. We've never really done a good job as an industry of explaining that sometimes that transactional level of accounting that some people call low level accounting, that in people's minds means low value accounting, is actually kind of the most important part of anything that we do. And we're as guilty of it as anybody. And that's why I was laughing too when people were dunking on bench, because I was like, this is not good.
No.
For the industry as a whole, if this is happening.
There's a branding issue. I've talked about this so many times. Like, okay, like you go to the dentist, there's the dental hygienist and the dentist. You know what each one of them does, right?
Right.
What's a bookkeeper? Right. What's a controller? What's a CFO? There's 78 different CAS abbreviations. We're confusing everybody for no reason. And you've got bookkeepers who provide legitimate advisory services, but they just, for some reason, feel inadequate or don't want to talk about it in a different way, or they feel insecure actually saying they're an advisor when they are. And then you've got advisors who literally are like the worst bookkeepers I've ever seen in my life. And there's just it's a branding nightmare. And I don't know. I might have been on this last episode where I said somebody needs to come out and just say, like, here are the words we're using. Everybody get on board. It can't be me.
I think it was.
Why can't it be you?
I agree.
Nobody,
Yeah.
because I don't say anything serious ever. So like, no one's going to believe me. This is the most serious I've been in like weeks.
Jesse's rolling his eyes in the background.
I mean, it's so different. Every industry is so different. I think about somebody running a restaurant, even a nice restaurant, like an expensive restaurant in where you're paying, where they're taking in, $20,000, $30,000 a night, right? That's a cash business. Your bookkeeping needs are pretty simple. And a controller, the job of a controller, bookkeeper, CFO in that business, that restaurant probably has willingness to pay if they needed it. But, it's okay, fine. Ingredients and things of that nature. All right, maybe we could get a better handle on our COGS, but still they kind of buy it pretty close to when they sell it. So I don't know. I don't know how well you could standardize it. A consumer packaged goods company, right? The burdens of inventory and COGS accounting are so monstrous that, controller doesn't really get it because it ignores the strategic. Director of finance doesn't really get it because it ignores the tactical that is so critical for working with the warehouse, right? Mm-hmm. But then if you go over to a SaaS company and it's all about ARR and revenue recognition, that's a whole separate set of products and processes and people. I don't know. I don't know how well we could standardize it. All right, fine. Let's standardize it by industry and then job name. Maybe then we can get something standard. And company size. How many warehouses do you have? If you have enough warehouses, you got to have a person devoted to doing inventory and COGS accounting. Do I have to true up like intercompany balances? If so, you're going to need a higher level operator than what you're going to get. Expense allocation. Yes. Yeah.
Joey, I think you're right, though. This is it's an accounting community problem, and that's why I am glad that there are so many people. Like I did say earlier, everybody parrots the same talking points. In the situation of bench, it was, in my opinion, hypocritical, the reaction. But like outside of that, I do think it's generally really good for the profession that there are so many communities and people like encouraging each other to charge more, because when we get away from this race to the bottom idea, right, the more people who feel empowered to charge $1,000 a month, then the market that buys from us is going to be conditioned to pay that much money, and we'll all make more money. But when you've got people out there that are still just being Walmart, right, it's like, well, how are we going to compete with Walmart, right?
Yeah. Well,
I think we'll probably always have people out there like that. Like, I think to some degree, I think there'll always be a bench of some kind, somebody who thinks they can scale that to some degree. But I don't think that negates the fact that we've got to reimagine our value proposition just in our roles, in our industry, how we communicate that, how we talk about ourselves, even like in what we do. I think that also gets a bad rap. And like, I can tell somebody like I'm an accountant and what somebody else defines as an accountant, what they think of. Like my mom's going to think of it different than, somebody else that I just randomly meet and I say that I'm an accountant, So like, I think that there does need to be just general change in that way. I don't know that I necessarily have like an answer for how we go about doing that, but there definitely, I think there's a root starting point, even beyond just us in the industry as well. Like we've got to do some education for folks beyond it.
Oh, we've got to hold ourselves to like a higher standard. Like I was just doing some consulting for someone the other day where we were talking about legal documents that they need. So it's like, if you're a business and you're going to pay a lawyer $5,000 for a buy-sell agreement that you're going to stick in a drawer and you're never going to look at for maybe even the entire existence of your company if it's not relevant, right? You've got to have it, but you're never going to look at it. And nobody ever questions the lawyer's hourly rate. But then we'll sit there and we'll argue with each other about whether we should be charging $80 an hour or $100 an hour for bookkeeping. And it's like, we're our own worst enemies when it comes to that. And it's like, we haven't solved the problem of explaining to business owners, like, you're going to pay for this document that you're never going to use. You're going to use this stuff every day. You're going to be in your QuickBooks file every day. And you don't want to pay for that? Like, what are we doing?
Make it make sense.
Yes.
I don't think. I think though there is an onus on the accountant to demonstrate their value in a way
Yes.
that makes sense. And I think that, when I first joined FinOptimal, we would talk about the way that we do things in a way that made sense to us. And it didn't make sense to the people we were trying to sell it to. And until we totally reframed how we talk about our software and services, then it clicked. Then people started going, I get what this website's about. I get what you guys are doing. Now I'm ready to buy it. And I think like there needs to be more sales and marketing training to accountants, right? So they can explain how to talk. Like they need to know how to talk about what value they're providing, because I've worked with marketing agencies that are trying to help FinOptimal grow. And it always takes weeks for them to even wrap their head around, what are we doing? Like they think about it as taxes and my bank account, right? And it takes weeks of meetings to be like, no, okay, there's more than that, right? And these are people that I'm paying to understand what I'm doing. Flip that. We need people to pay me and understand what we're doing.
That is rather striking.
What?
When you pay them to understand you, it still takes weeks. Like they're
Right.
getting
That's what I'm
paid
saying.
money.
And we're trying to get people to pay us for stuff they don't understand.
Yeah.
So it's just it's a marketing thing. But yeah, I don't know. We could get rid of the
silver
Walmart.
bullet. You're selling a complicated thing for typically a lot of money. You know, services charging thousands of dollars a month are facing, a buying decision that's usually not instantaneous. Sometimes it is. How do you position it? How do you,
I know how.
4 P's of marketing. You know how. Tom knows how. You hire a marketing firm that you then pay money to understand it.
No, you just memes. We use so many memes until they understand it. That's the memes
are
is
good.
the universal language.
Yeah.
We just have
the Big
to
Four
make
accountant
enough.
account has some good ones out there.
Right. But those are tailored to like accountants, like we all like commiserate and laugh together. We need more memes to explain to business owners why they need an accountant.
Targeting the customer. Yeah.
The accounting meme verse.
That's cool. That's a good.
You should start.
I would say, you on that?
Account. You want to get famous? There you go.
Oh, yeah. I thought you said you
idea.
looked at my Twitter and my LinkedIn. It's 98% memes. It's just all.
I mean,
memes.
I think if you look at my teams here, it's 95% gifs, and it's the same like Kansas State gif of Willie the Wildcat pointing at you saying, "What's up?"
Gifs and memes. Gifs and memes.
Yes.
But for real though, like if you actually think about that, though, like gifs and memes are just it's a very simple and casual way to communicate an idea, right? Like I always say this to our team, right? Like I think in today's day and age, corporate jargon, it's people are tired of it. And just communicating like humans is the best way to interact with one another. Like, and if we can just talk about the way that like what accounting is, like you would explain it to your friend at a bar or a party, I think we have a better chance of getting business owners to go, oh, that makes sense. That's not what I thought it was. I'll give you money for that. Right. So I would just challenge everyone to just speak more human about accounting. And then I think people will get it.
We talk about that all the time. And like the funny joke in our company is like Joey uses a lot of sports references. And I'm like, that is 100% fair. I've tried to expand to movies. I'll throw a Taylor Swift in there, but like, yep, I'll give a good, sports reference. But the reason I do that is because, to your point, I'm trying to explain something that inherently makes sense to me to someone that it doesn't make sense to. And I've got to bridge that gap. So if I can sit there and say, you doing this is like Leon Lett fumbling the ball at the 2-yard line. Oh, okay. I remember
why I talked so long, because I knew this was going to come back to this, guys.
Yeah.
Always does.
I'm in the cold.
Does. But it's like,
I'm with you, Joey. I'm with you, brother. Keep going.
Yeah. It's like, if I can get you to understand that at a different level, now we're speaking the same language.
100%.
I just had this epiphany. So I think that you could also tie this into, especially if you're trying to target sports lovers as your target people that you want to work with. Like, obviously there you go. There's the memes. There's the genre of memes and GIFs that you're going to put out there about how you describe yourself and your services. You're trying to talk to a millennial mom who's a Swiftie. Mine are going to look a little bit different than yours, Joey. Mine aren't going to be sports references. So,
but that would work,
got to know who
right?
you're
Like
talking
at the
to, your
end of the
audience.
day, people buy from people, right? And like if you're a
Right.
solopreneur or starting a small firm, you're not going to get 100,000 clients. How many do you really need? 50, right? There's not 50 small business owners out there that wouldn't see a Taylor Swift meme and go, I'm going to actually look at this person, right? Maybe I have something in common with them, right? It's like niching down in a different way. It's like finding a niche that's having a personality trait that's in common with a buyer rather than just throwing jargon at them, right?
And a picture's worth 1,000 words.
Are you coming back to my idea of the AI picture behind the thing? Do you want to invest in that, Jesse?
I remember that.
Well,
no,
but like
I do think, I don't know.
Suddenly we're on
We
Shark
talked about the need to educate. How you do that at some level, I think you also need an accompanying meme education campaign. What does that mean? Meme. What does that meme mean? Like sometimes I need a minute to figure that out. But I'm with you guys that we need a better way to communicate what the value prop is to the right audience. Lots of different ones, sports ones, music ones, art ones. I don't know.
Parent
ones. Yeah.
Memes as a service. Hit me up.
Memes as a service.
There's a guy on Twitter who, like, his name is Bailey Carlin. He was with Barstool for a while. He's done his own thing now, but he teaches a class at a university that literally is he calls it Memes 101. And he teaches college kids like how to communicate through memes. It's kind of neat.
It's becoming much, much, much more popular.
Yeah. Well, because we all make assertions about who we are, right? Like we do that all the time. Like looking at your background here, like I don't know if you like actually play the guitar or if you just like the vibes that it's giving off, but you're making an assertion about who you are and what you care about by this. Hannah with the picture of her kids behind her over her left shoulder, me with my golf, right? All those different things. We all make those assertions all the time. Yep. So why should we just expand that? Like, why shouldn't we expand that to everything we do?
Well put.
I thought what was behind you, Joey, was abstract art for a long time.
Me too.
Yeah, definitely golf courses.
Now that makes sense, but I am with you, Hannah. I was like looking and I was like, where's the golf picture? That little one behind me. That looks like a
But y'all are just going to nod through it. Y'all weren't going to say anything. You're like, wait, the golf.
No,
I mean, it looks great.
I am glad you said something because I too was like, are they pictures of golf clubs or?
Yeah, totally.
Well, you said that though about the memes 101 in school. It kind of makes me think that, like, I feel like how we market ourselves in our profession should be a part of the curriculum of what we go through in school. Like, it really should be a part of what we walk away from our colleges armed with as we go into this profession. Honestly,
it's funny you mentioned that because I wanted to segue to this too. So this is a natural segue. Like I remember when I first got out of school, the thing that industry was saying we needed, like the question was always like, hey, it's great that this really complicated like gap leasing thing that you need to know. I don't remember what it was at the time. I didn't really pay attention. I studied for the exam and passed it and I was done. But like everyone was like, what I really needed you to be taught in college as an accountant was how to use Excel. And now I think the new version of that is what I really need you to be able to do as an accountant is have some communication skills, because advisory is becoming and has been and will become more important for accountants in the future. So setting the table, one of the things that we have seen in the industry the last couple of months that started to kick in, and Blake Oliver has some content on this, lots of folks are talking about it. States are starting to push back on like the 150-hour rule for the CPA. And I'm like, is that really going to start solving our problem? Or is that just a red herring that like makes us feel really good, but isn't going to solve the problem? And my concern is that it's going to lead to less qualified individuals coming out, and we wouldn't have solved the underlying issues that were making that 150 so prohibitive.
Yeah, I've got Jesse. You go first on this one because I think my take on it's probably specific to me.
I personally, I'm trying to remember if I had the 150-hour rule when I became a CPA, roughly around 2010. I don't remember. I remember having to take some extra classes, to pick up enough accounting classes to take the test. But I personally don't think it's going to have major sway over whether people decide to go. I don't know.
That's my opinion.
I don't think that the number of hours, first of all, calling it hours is ridiculous because every time I laugh and I'm like, why is it called hours? Like credits, whatever. It's ridiculous.
It's so stupid. Yes.
It's the way that I got my CPA was a joke. I got my bachelor's and I had extra credits from high school and I took like 2 online classes to hit the accounting specific requirement. It was just me paying extra money. Like I filled the 150 with like gym. It makes no sense. Make the test harder. If we're like, I don't care if there's any hour requirement. Like, why do we really like? Why does
I don't remember the test being easy? By the way,
I was going to say I'm currently in the process. I will fight you if you want to make it harder. Like,
I don't want to. All right. I don't want to make it harder. I'm just saying.
Okay, thanks.
Like the hours doesn't make sense. Who cares about hours, right? The test should be modified, I think, because I'm a CPA and I don't know how to do a statement of cash flows or read it because I just like got lucky and it wasn't on. I sat down. I was like governmental accounting or statement of cash flows. At the time, governmental happened to be popular on the test. And with 2 days, if they said, I'm going to study this instead, and I guessed it, and I never looked at it again for the rest of my life. Like it's stupid. The whole thing makes no sense. I'm a CPA. I'm terrible at accounting. I passed a test. It should be more practical. Number of working hours under a CPA should be much more valuable. Like, and the test, it should be more simulations, I think. Less multiple choice, more simulations, put things on about problem solving and communication, and make the test indicative of what we want people to be. Who cares about hours? My God. Like,
I think I'm with you, Tom. I don't care. I don't care.
Yeah, I think like an apprenticeship is just as valuable as like, we see that in other things where it's like other, things like electricians and stuff where they're like, yeah, we need you to pass this test. This is good. But what we really need is for you to like have a little bit of, like driving, right? If you have kids that are driving, when they do the driving test, they got the homie in the right with the wheel to make sure you don't like drive off the side of a cliff. That's kind of important for learning how to do some skills.
If we're going to call it hours,
correct me if I'm wrong. The 150 hours will basically means
how.
you have to do graduate school, right?
Unless you do what I did and have a bunch of history
really.
hours.
Unless you change your
exactly.
degree a couple of times.
And then you just have to fit a random 30 hours of accounting hours. So then you're like, well, I take this random. I just need to get a C in a class. Like the fact that it can be rigged, as someone who completely rigged his way to a CPA, it's broken. I graduated with honors in accounting. And when I sat down for FAR, I Googled, is revenue a debit or a credit? Okay. Being good at taking tests should not let you get certified.
I did not know that when you applied for this job.
I graduated with honors from Binghamton, which is like it's an accounting farm for Big Four.
Yes.
And I Googled, is revenue a debit or a credit? Like, I'm not even kidding. Like, I was just good at taking tests. Like that shouldn't get me 3 letters when there are people out there that are way better at accounting than I am. Right. So make it more practical. Otherwise it's just broken.
Well, and I think the other challenge too is I think, and this was, I might be paraphrasing Blake. I haven't listened to his entire podcast, but I know that was something he's talked about, which is like start removing some of these barriers. And I'm like, yeah, I agree with that. But that's
You're
like
talking about
one
Blake?
of, Blake Oliver. Yeah. And
didn't he try to be the head of NASBA or something?
I think he applied.
So. Yeah.
He should have
been.
been.
Seeing that on LinkedIn.
He should do that. Whoever,
he's got the most common sense approach to all of this from any of the influencers that I've heard.
Him and Stats are the two.
Mm-hmm.
Yeah, sorry, go ahead.
The thing that scares me though is like we'll use that as like, oh, we've reduced some of the barriers to entry here. Like this is going to solve the pipeline problem, but we won't have solved like any of the 15 other things that are causing the pipeline problem. Like You know, I still think wages are still way too low for starting stuff. There's less opportunities for people to like move up quickly or, you know, do the other types of things. Like, you know, again, whether it's 150 hours or not, if you've got a smart person that you know, 15 years ago would have become an accountant, but now they realize, oh, I'm just going to go do some sort of software engineering or somewhere else because, you know, worst case scenario, I've got a 30-year career in this. Best case scenario, I pop at a you know, startup and just, you know, have an equity exit and make lifetime money by the time I'm 30. Like, there's nothing in accounting that's going to compete with that for those good analytical brains that we need to do this job. That's my big fear.
It's it goes back to it's good. Like the hours should all of those things that you talk about are, you want someone to be able to stumble into accounting, find that they love it, work under someone who is a good accountant, and say, I'm going to pass these tests. That should be the path to being a CPA. You shouldn't have to pause at 27 years old and say, I had a general business degree. I kind of got this accounting job. Now I'm in it. But do I really want to pay $25,000 for credits to get certified? Like, my friends have gone through that. And I'm like, that's awful. And you're better at accounting than me. I just picked it earlier. That's not how we remove the hours entirely. 0 hours.
That is a scorching.
I'm the Ron
take.
Paul of accounting now. No taxes, no rules.
I mean, I hate this might be a little controversial, but you know, if the concern is we're not getting enough accountants, let's fix it by lowering the hours requirement. You know, I hate to broach the topic because I don't remember hearing it on the list, but I do think AI is probably going to change things a little bit in terms of what the accountants are doing and what they're needed for. And that's another element here, but not to open a can of worms.
Well, I heard probably on TikTok somebody say that AI will not take our jobs, but someone who knows how to use AI will take our jobs. And I was like, ooh, that was good. Like, that is really, I think, the best way that I've heard that put.
I think that was Tom. Tom, didn't you post
I think
that?
Tom put that on LinkedIn.
Yeah.
I did make a LinkedIn post today about how 85% of our jobs are going to get taken by AI. But spoiler alert, it is not a serious post. But no, you're 100% right, Hannah. I think no matter what, whoever stays on the cutting edge of what's new is going to be okay. Like, I think that's something that Jesse and I talked about recently on one of our podcasts. It's like, to be a top 1% accounting firm or top accountant is just, you have to just try stuff. Everybody else is too afraid to try, or there's 14 levels of red tape, and I don't know, I have to get this $20 ChatGPT Pro subscription signed off by my team. Like, if you have that much red tape and that much hesitancy to try new stuff, you're going to get left behind. But people who are just willing to try stuff and play around with it and tinker, they're going to be fine no matter what. Even if you're not using AI in your day-to-day life, if you're just keeping up with, oh, I can see what it can do, and I recognize where the limitations are, and my mental math is it's not worth investing a ton of my time right now, but it's evolving at such a rapid pace that, hey, I'm just going to like keep an eye on it, right? Watch it on the stove, and when it's boiling, I'm going to be the first one to grab it. You're going to be fine.
Well, there's going to be some canary in the coal mine, whether it's stats or somebody else, who's going to figure out like what the tool is. And like, once they've blessed it, that's when I'm going to become an adopter. So like, maybe not the first adopter, but like 2 or 3, that's where I want to be.
100%. You just follow stats, Chad Davis, and you're good. They'll tell you what's good. Yep.
Well, I have an opportunity for y'all if you like want to get in on a tool, because we have an initiative here that we're looking for a solution to automate our close workbook process from start to finish. Like, so we have close workbook reconciles every account on a balance sheet. And what I have found as being a part of this beta test is that it doesn't exist right now.
No.
Like, I don't think there's a product right now that does it like the way that we like fully want it done. So I'm just saying there's an opportunity there for you guys.
Yeah. I mean,
I don't know if you're going to find one product that reconciles every balance sheet account, but if you're looking for one that reconciles accrued expenses, deferred revenue, prepaid expenses, and unbilled revenue, I do happen to know of a solution. what solution are you trying? You're saying that doesn't exist. You're trying to standardize, and you haven't found a product that does all of them.
Right. Yes.
Yeah, but I mean, but like
Can I
we
name
have,
drop
and I'm not going to say. I was gonna not name drop. You name drop.
Okay, I'm gonna not. I will. I'll wait.
Well, I was gonna name drop.
I missed it. What did she drop?
I'm not gonna name drop our customers. No, Hannah, go ahead. You named. We can bleep it.
Okay.
I'll wait till we're done recording. I'll tell you
all right.
what we're trying. Yeah, there we go.
I've had 0 bleeps on this podcast, which is really good for me, by the way. So I just want to take credit.
Our competitors or our customers?
Jesse, we're talking 2 different things at the same time. Hannah was going to say what vendors they were looking at, and I was going to say what some of our customers have done. So I don't want to turn this into a product pitch, but Accruer obviously does what Jesse talked about, but like Booker is a Google Sheet that syncs to QuickBooks. So like these are legitimate firms that are using our books for hundreds of clients have set it up where Accruer does all the accruals, automatically reconciles with the report Jesse alluded to. Everything else that's spreadsheet based is in Booker, which is a Google Sheet, syncing to QuickBooks. And then you pull the balance sheet with Wrangler or other app into the same workbook. And you can just use formulas to basically keep things in check and just literally write formulas to look
you should now mention that we're about to release a report that if you have activity that's not booked by that in the balance sheet, we specifically call that out for you.
Well, not for Booker and Wrangler, but sure.
Well, we're talking about balance sheet reconciliation.
Yeah, I know. I'm talking about if you're using Booker to book entries for P&L and balance sheet, you're also pulling those same things.
Right.
I know we can do it. We basically already have it. So
we have you covered. Yeah, there's a product.
We got you covered.
Okay, then I'm legitimately going to connect y'all with our director of IT to make sure that he literally talks to y'all about it, because I'm telling y'all, like, it's been a challenge to find something. Like, I think we found, like, when we've talked to some people who are like doing pieces of what we're trying to do. So like we're trying to do like the whole shebang, and really, so like, it's pretty manual now in terms of our close workbook. We require it for all of our clients, but we're trying to remove the manual piece, obviously lean into the AI and how it can really help our folks.
Interesting.
Didn't mean for that to go down a whole product like specific.
No, it's
talk,
fine.
But
we could talk about that another time. I don't think anyone wants to hear me like walk through processes with you on the call, but we can definitely do it with your IT person, because I'm curious, like, what are all the steps are involved in. I'm sure there's ways to do it.
And that's what I like about, not to, inflate y'all's egos too much, but what I like about what FinOptimal provides, and why I think not only are you guys cool dudes, but like the way you think about the world is really interesting. Again, I think if you'd have told me 10 years ago that QuickBooks Online would be able to create its own EOS system, like with different things plugged in and kind of be the centerpiece of it, I would have laughed you out of the building, because that product was garbage in 2017. But like, you can stack so many different things on or around QBO right now that, like, if someone told me, well, I'll just get Sage 300 to do all my stuff, I'm like, why would you do that? Just do QuickBooks Online. And you can stack various different things to fit in there. So like, I really think the way y'all are thinking about that and providing those tools is super helpful. And if CFOs and bookkeepers and accountants and people who are using these things understand that you don't have to have one software that does it all, you can literally sit there and say, I can get the best in show for bill pay. I can get the best in show for credit cards. I can get the best in show for payroll. I can get the best in show for automation, and just pick and choose these little bits of your tech stack and smash them all together through QuickBooks Online. Like, I
Joey,
don't know why that's
not standard. Are you a dog enthusiast too?
What's that?
Are you a dog enthusiast too?
Oddly enough, we have cats.
Oh, okay. Because I thought Best in Show was specifically for like dog shows.
Well, I did love, what was that movie that was with?
Hey, Joey, great point. Let me ruin it by talking about dogs.
I've never heard that outside the context.
He hit such an eloquent pitch of why
QBO is great, really was.
How he fit into the ecosystem. It was like the perfect phenomenon. Hey, Joey, do you like dogs or cats?
Distributed ERP. We call that distributed ERP. Yeah, Joey.
QBO was thinking of sponsoring this podcast, but now, never mind.
Now we're going to get the Westminster Kennel Club dog show that competes with, like, doesn't it compete with like the Masters or something like that? Like, it's always on when it's like some other massive sports event. Yeah, something like that.
Joey, that's that concept though is really unique, and I think that's what makes QBO great. And what I've found just like interacting with hundreds and hundreds of firms over the last 2 years now that we're selling them our software is the firms that have an accountant in the tech advisor, tech ops role move faster and are so much better, just because it's like there's no language barrier. The person knows, they've closed books. The person that is running your tech should have closed books previously. Obviously not a requirement, but it's better to have someone than to have no one. But to have someone who has closed books puts you so far ahead. Far ahead. Yeah.
That's what separates our director of IT. He was a CFO before he kind of went into that role. So he's thinking about it from that perspective all the time.
Exactly.
Huge.
Exactly.
Well, I know we're getting towards the end of the show here. Is there anything, you mentioned that you guys have a new product that you're kind of rolling out? Always want to make sure we get a chance to talk about the cool things you guys are doing, because I really do think you're more on the leading edge of automation. You have been for your entire careers from that perspective. What are you working on? What are your timelines? How do people get in touch with you? How do they follow your other not another podcast about accounting?
I mean, since we last spoke, we have 3 apps that are publicly available right now. And we wrestle with this all the time because we've got other apps that are unreleased. But where we're really trying to focus right now is helping people who are using these apps and people who aren't to get value out of them today, right? We think with Accruer, prepaids, deferred revenue, fixed assets, payroll accruals, Booker, every other journal entry, and Wrangler, a reporting app, you can really continuously close your clients' books. And while we do have unreleased apps like a payroll booking app that can book payroll a little bit more elegantly than Booker can, you can still do it. Sure. You can still do it with Booker, right? So where we're focusing, at least for the first few months or quarters of 2025, is just how do we get more people ramped up on these things? Because the aha moment, once that aha moment happens, it's okay, converted. That person is now an evangelist, and they'll go show everybody how cool this stuff is. So just honestly reinvesting in what we've put out there, like Jesse was alluding to earlier, an Accruer report that'll auto reconcile QBO and Accruer. Right now, you run a report from Accruer and you look at QBO to tie it out. But what if it was just automatically reconciled all the time? Right. So how can we just double and triple down and just keep digging that moat? Because we have other products that we will release, but for now, why not make the ones that we have that people love the best version that they can be? Yeah. And I have to basically just fight Jesse every day to not release new apps. He's like, but we can just release this one. Yeah, and I'm like, no. I
really do. The productization effort's very important, as is customer support and being responsible to feature requests. And the products we already have out there give us plenty of work to do right now. So
yeah. But it's funny because accountants are so skeptical and they're such rational decision makers that we have so many people now that are like, yeah, we heard about you a year ago, but you're still around, so now we'll actually, because they're so used to tech just coming and going and coming and going. So, I mean, every day there's a new app born from an incubator that's going to automate your books, and then 5 days later they pivot to, I don't even know what, selling watches or something. They just oh, accounting's too hard, I'm just going to go change my mind entirely. So I get it. People are kind of tired of apps coming and going, but now that they know we're here to stay, I feel way more firms are all right, let's do this thing.
Well, I think that's what separates y'all, is you all are actively using, you're not just developing your own products, you're actively using them in your practice, which I think is a huge, that's a massive, again, analogy time. If I'm going to a restaurant and the chef doesn't eat his own food, I'm a little nervous, right? But if I see a fat chef back there, I'm like, oh man, this is going to be a great, great meal. Right. Not to compare you to a fat chef, but
we're the fattest. We are the fattest chefs in the world.
Guys, I apologize. I do have a hard stop. It's really nice to see you again, Joey, Hannah. Thank you so much for having us back. And I'd love to talk some more soon.
Thanks, Jesse.
Thanks,
Appreciate
guys.
you.
If you're a young
Peace.
CPA looking to develop in their careers, we're always looking for great people. Visit our website for remote work opportunities with Summit Virtual CFO, or find all our open positions at Anders CPAs and Advisors.